Good afternoon, everyone, and welcome to the next panel. We're here today to talk about open finance, a blueprint for the digital economy. My name's Hugh Davies. I'm a co-founder at Ozone API, and I'm delighted to be joined by a fantastic panel. I'm not sure what the collective noun is for founders, whether it's squad or gaggle or team, I don't know, but that's what we have today. So we have Sam Seaton, who is founder and CEO at Moneyhub, Brendan Jones, who is one of the founders and the chief commercial officer at Konsentus, and Helen Child, who is founder and CEO of Open Banking Excellence. So thank you everyone for joining. I guess today we'll be aiming to sort of meander through a bit of a journey from open banking to open finance and potentially through to open everything. So perhaps start with open banking as that foundation. And Sam, I'd just love to get your thoughts in terms of where you think we are. We're over 3 years into the journey now. How do you think it's going? What's going well? Where are the challenges? What do you think?
Well, of course, I can still remember the days when nothing worked. So, of course, I'm still getting incredibly excited by the fact that we've got, a standard financial API that, we can all use, that I can make, I haven't been into my banking app for the last year. So, I make payments in Moneyhub, I move money about, I decide who I'm paying from where, I keep track of everything. I mean, I'm still like a kid in a candy shop, right? But that's not to say it couldn't be better. It's not to say that I don't, that there isn't still tension between, I guess, what I would call the CMA order and what is being delivered. And perhaps also even, just last night chatting to a few people, one of the things that stood out to me is the banks look at the success of open banking from how much access they're getting. So they've spent a lot of money, put a lot of effort in to getting this, up and running, and then they're like, oh, but no one's using it. And I'm like, that isn't the way to look at it. So I was trying to say last night that what's important is that, first of all, you've got to make something possible, and then it's not people. You don't just put something out there and they will come. The consumers, have got no idea what open banking is. They wouldn't even like the sound of it. I wouldn't like the sound of it. Open banking. So I think there's still a lot of work to be done in terms of the propositions, the value exchange, and also the banks, to be fair themselves, to stop thinking like that. As I said to the one last night that I was talking to, I said, well, I am pretty sure this conversation is the conversation every company was having when they were talking about their online shopping. It's like, oh, no one's using online shopping. We've got thousands of people in the shop. That's where it counts. Let's sort that out. It's like, well, we all know where that ended.
That's a good point, actually. I mean, and I think you get different catalysts in different sectors as well. Like, so, I mean, again, as a small business, for now, the way that we connect our accounts to our accounting platform, kind of the default option now that everybody uses, it's an open banking integration. As you say, the customer doesn't really need to know what's going on behind the scenes, but it's the default way of doing things. And I think we're not necessarily at that catalyst point for all other financial interactions yet, but they'll come one by one. I mean, Helen, you're continually talking to all of the different players in the ecosystem through OBE. I mean, how do you see things at the moment? What's your view in terms of where we're up to in the journey?
Thank you. I would agree with Sam, and I know Brendan be interesting to see what he says, but I'm genuinely excited. I mean, the UK is created the blueprint for open banking, and we are leading the way. I mean, we can talk about VRP and sweeping. That's the very hot topic at the moment. But if you actually just have a look, I remember when I actually first met Sam. It was about 3 years ago, and we were in a room. It was the very, very first OBE, and there was 38 pioneers in a room, and sponsored by FinTech Scotland. Somebody passed me a mic. Everybody was drinking warm wine by these guys served in kilts, and said, let's rift. And we started chatting, and Sam was a speaker then. And from there, this is a new exciting thing that might not happen, very sort of pioneering, as I said, to now, if you actually have a look at some stats and some data now. The latest figures from the OBIE say that in the ecosystem, we have 325 regulated providers made up of 234 third-party providers. Of these, 114 regulated entities have at least one proposition in the marketplace. So go back to, that 38 pioneers in a room, may this work, we've got this CMA order thing that's happening, to those numbers. And then you look that we've got 4 million open banking users poised, to do stuff. And as an industry, the fintechs and the banks collaborating, that's where the magic will happen. And it's through that collaboration, which we see so much at OBE, that you're going to, by nurturing that ecosystem, that the fintechs will innovate and more use cases. And that is, I think that is the exciting thing. When you look at the number and the value of transactions that we have going through now, that speaks for itself. You can look at the size of the market and how we have progressed. But if you actually look at the adoption that we have in the UK, as opposed to the adoption we have across Europe, we really are leading the way. Yeah, we should all be really, really proud. And it's very easy to criticize any part of the ecosystem. And in my role, I get to hear all parts, and it's a bit like being a priestess. I have to. That is that trusted place. But what I would say is that the world. I look at our viewing figures, and we have policymakers, regulators, and obviously banks and fintechs from around the world looking at OBE. And to see what the UK is doing next. So I actually see that's a bit of a privileged place for us all to be, because we are leading the way. Yeah, enjoy that copper sound.
That's amazing service. Yeah, I think that's fantastic. And Helen, I think one of the things you were doing there was an open invitation for your confession booth, so that you can continue to hold the views from the ecosystem. I think you're right. There's some really interesting leading indicators. You talked about the number of third parties, which is a great indication of how thriving the ecosystem is. There's all of the data around the number of API calls. The next leading indicator is the number of businesses and consumers that are using it. Ultimately, this is outcome based. Is it making people's lives better? But yeah, I think we're getting to a point now. There are some really good positive measures in the UK. You mentioned Europe there. I mean, Brendan, you guys are very active working with banks in the ecosystem right across Europe. How do you see the situation across Europe? What do you think of the differences between the UK and mainland Europe and some of the different considerations?
Yeah, and they really are different different models from the UK to Europe. And I suppose one of the problems that we have with Europe is we cannot get a consolidated view of volumes of transactions that are transacting in the various countries. I think first and foremost, we're always in danger when we view the EU as one sort of area. It's not. It's 30 different countries, all with historical differences in terms of payment, account access channels, and so on. So what we're seeing at the moment with our customer base who utilize our services for identity and authorization of third parties in the Nordics, and I think this is because they have a much more modern infrastructure, we're seeing transactions really starting to flow in anger in that region. However, when we move down towards the south of Europe, things tend to be a lot slower. You've got countries, for example, like Portugal, don't even have any third-party providers at this moment in time regulated in country. So you have to look at each one individually. And also, where I think the European model differs from the UK model is where the European model fails, because it's been regulation that's told people what they must do, but not how they should do it. And I know we'll come on to open finance as we go through this discussion. I'm a passionate believer now that as we move these schemes forward, as they mature, and everyone on this panel knows my views of the open banking implementation entity per se, but that's a different issue. But I do think more scheme-based approaches should be adopted if we want to see these programs really flourish and develop very, very quickly. Right from having standardized APIs in one instance, so fintechs don't have to do multiple integrations across multiple financial institutions to get data and so on, but also writing the rule books. You know, Helen, you just talked about recurring payments and so on. You know, basically, it's a rule book that's been written that all participants can adhere to, so we get commonality in the industry and we can start seeing volumes coming through. And I think as we mature with this ecosystem, one of the biggest issues in Europe is fragmentation, which we don't have in the UK, and the UK has really, really benefited from that. And, you know, we just talked about the UK, and, you know, Sam, you said that banks not seeing any transactions, and you only have to look at OBIE stats on a monthly basis. 840 million transactions successfully processed just for the top 9. If we then sort of say, well, actually, what's that for the whole of the UK? It's probably more like 1.1, 1.2 billion per month. Most of those are just account access based transactions. Once we get account to account payments coming through in anger, I think we're just going to see those volumes accelerate beyond belief. And it's just a hugely exciting time for all of us. But I think, you know, I'm sure that we're going to have a wide audience listening to what we're saying today. And I think there's no wrong way or right way of doing open banking or even open finance. But I think countries around the world who are looking to adopt these new types of services can pick the best out of what's happened in the UK, the best what's happened out of Europe, what's happening in Brazil. Learn from lessons learned by us as pioneers, so they can drive adoption a lot quicker. And, you know, most of these guys are looking to increase financial inclusion, which is what we're all looking for at the end of the day. So if they can learn lessons from us, we can help them on their journey much quicker.
I think that's a really good point. I mean, at Ozone, what we try and do is we try and help banks deliver really good standards compliant APIs. The standards are really important to what we do. And I think that's one of the differences between the UK and the rest of Europe. There's been a pretty consistent implementation of a strong standard in the UK. That hasn't necessarily been the case right across Europe. There's a lot more fragmentation. It's interesting to see a lot of the markets that are moving now, Brazil, I think Mexico to come soon, Bahrain earlier in the year, moving towards much more of a standards-based approach to open banking, and actually going beyond what the UK have done and putting a real emphasis, not just on common standards, but conformance with that standard and putting in place a certification regime. And I think that's one of the areas where there's just a great learning. If you're going to do it in a new market, leverage best-in-class standards and make sure they're implemented well. But no, that's interesting. I guess there's some really positive sort of pictures we painted here in terms of the uptake. I guess one sort of super quick question, I'll perhaps pose it to you, Helen. What do you think has been the biggest win so far? And there'll be the juxtaposition question in a minute coming the way of one of you. But what do you think's the biggest win so far?
I think there's probably two, if I could have two. One would be the adoption in the UK, and as Brendan said, us having this exportable commodity now of skill, and people are really looking at what we do. And the biggest win in terms of use case would be payments. It really is, whether you want to look at HMRC, and that's sort of gold-plated the payment. You can do bank to account. You can settle your tax bill that way by open banking. So that has got to create a lot more traction in the use case and give it that endorsement. You know, look at we all cite Captain Tom even and his 30 million raised. At OBE, we've got an amazing QR code powered by Moneyhub. And we collaborated with Moneyhub and Streva just to demonstrate the ease at which you could make an open banking payment. You're literally scanning your QR code, and within a couple of taps, you've made a donation to charity. So payments has to be the biggest win. And we believe that open banking payments should be ubiquitous. So I think that's a real win. And it'd be interesting to see what everybody else says on that. But going back to us being a trusted platform that arbitrated for an independent conversation. What I really see, and I think this is a win, okay, and is the level of conversation and in the adult conversations that we have now as an industry. I think that's the win. There really is a level of maturity, particularly around VRP, and when we get to start talking about customer protection and trust and liability framework models. That's because people can see the market is really taking off and are planning for that volume and that scale. Those aren't negative things. That's because people are planning in a professional and mature way for success. So I think that's part of us really growing up, if I can call it that. Yeah.
No, thank you. That's helpful. I think there's still quite a bit of a journey to go in terms of how do we really make things like VRP scale and be accessible across all of the banks and to all of the third parties. But no, I think the potential for payments is really exciting. Sam, perhaps flip the question around a little bit, and this is perhaps then the link into sort of talking a bit more about open finance as well. Depends where your answer goes, but what do you think the biggest challenge that remains to be tackled is in the open banking space? So we've heard some really positive stuff. It isn't all rosy yet. What do you think the big challenge that needs to be overcome?
Well, so I'm going to steal Helen's line. There's two. So the first one is that I really do think we're expecting too much as an industry to rely on the consumer suddenly going to have a light bulb moment and decide they want open banking. So I think we've got to get our heads around that. So that's to all the players in the industry, the banks. It's the propositions and the value exchange that will work. And you gave a great example, Hugh, about the SMEs and the uptake in that. But I would just encourage some of the banks to look at how they're, processing mortgages. I mean, just recently my CFO had to actually upload all her bank statements, still, it's like, it's just ridiculous, right? I mean, absolutely ridiculous. And okay, she knows about open banking, so she thinks it's more ridiculous. But if she didn't know about open banking, if you've given her the option to upload those statements, if you connect your account and the statements can come straight through, and we only need it connected for a day to get them too. It's not like you need to stay connected even for that. So, there's no consumer in their right mind, unless they've had too many blue cocktails the night before, that is going to say, I'm not doing that. So I think that's where we need to get our heads at. And then the second one really is the limitations around the fact that it's current accounts and payment accounts. So what that means is we just slightly miss a trick, because I get all excited as a consumer when I do find this, this new toy. But then actually, I've done it myself. I moved money into my savings account and then forgot I couldn't move it back because I got it in there. I'm like, oh yeah, open banking doesn't, because we got everything kind of gets connected up, and then I realised, and of course to a consumer that does not know, that's just annoying, isn't it? I mean, I know why. It's not going to make any sense to anyone out there as to why they can't put the money into the savings account and then think, I need to top that account up from my savings account now.
So yeah, this is a perfect segue into open finance. So Sam, I mean, you guys are super well positioned. Just explain to us, so what is open finance, and what do you think needs to happen to make it happen?
So the main difference between open banking and open finance is obviously open banking is current accounts and payments accounts, which means it's everything kind of next level up. So savings, mortgages, loans, investments. We've still got as an industry, and for Moneyhub, we will still access them, contract inquiry, bespoke APIs, screen scraping. We'll do whatever we can to try and get all of that data into the mix, because the big win is that means it's holistic. And when I try and help people with their next best action with their money, you can really only do that if you've got information beyond their current account. So that's the big miss at the moment. And what needs to happen is the government just needs to regulate the investment and savings industry and the lending industry to say that just like open banking, you too now have to share via authorized and regulated third parties that data with an explicit consumer consent. I mean, it's really simple.
You say, and in theory, yeah. I mean, again, we're working with a whole load of banks in Brazil at the moment, and there the scope's really interesting. The regulation is a full open finance scope, so insurance, pensions, investments, so full open finance scope with a huge country and some real genuine outcome focused regulation here to help try and tackle things like financial inclusion. So it's really exciting, but I think then most of it is falling under the purview of, I may be wrong here, but it's being driven through one piece of regulation. I mean, it's one of the challenges in the UK that this sits under a number of different regulators. So actually just getting it mandated consistently is really hard. Is that part of the problem?
It is part of the problem, but I think there is a secondary problem, which is, and I think there could be, maybe there still is some ways to mitigate that. The thing that I find fascinating is that if the savings, investment, and lending community, really got their act together, I think they could make, premium APIs available at a commercial rate. I mean, I think we'd all, even consumers, they're not against paying for good service and value for money. So I think they're missing a trick there. But by dragging their feet and waiting until they are forced to do it, that ironically means they end up in a place where I suspect they'll have to do it for nothing. And that's the bit I don't get. I mean, they've seen what's happened over, on the open banking side, the pension dashboard. If they think that they're going to escape that, then think again. So why not get on the front foot and actually put the APIs in place? And if you want to charge for them, charge for them. Actually, we pay Zoopla money for, the property valuation feed. Yeah. And our clients love it. And it's a premium API. What is going on here?
No, I couldn't agree more. I mean, I think the opportunity is there, and it's an inevitable outcome. It's just a question of what's the right route to get there. I mean, I guess as we move towards an open finance ecosystem, there are far more players, and there are probably different types of third parties as well, advisory services and the likes. I mean, Brendan, you guys are really focused on helping ensure that this is a secure and trusted ecosystem. What do you think are some of the challenges that presents as the ecosystem just gets bigger with more and more players?
I'd like to go back to a couple of other points in a minute, if I may. But the challenges it presents is, obviously, if you're looking at open banking today, it's pretty straightforward. Only regulated entities are allowed to operate within the ecosystem. However, as we move to what I believe to be a truly inclusive open finance ecosystem, we're not only going to have regulated entities operating within the ecosystem, we're going to have non-regulated entities operating in the ecosystem. And that in its own right poses a whole host of other issues here, because with regulated entities, obviously they have to go through all of the due diligence and so on with the regulators, not just about their business models, their logical security, their physical security, and everything else around that in order to be authorized in the first instance, whether it's a third-party provider, whether it's a credit institution. When we move to having non-authorized coming in, then obviously one can start to worry quite a lot that you're going to have organizations operating in that space who don't necessarily have the same levels of protection and mechanisms in place that you would have with other organizations. So it's not just about, as we move forward in open finance, being able to identify who the third party is, being able to understand whether they're authorized. Yes, it's about identification of the third party, but it's also understanding whether that third party is still fit for purpose, hasn't been compromised. So the number of data sources you need to start pulling from there to be able to give the data provider, whether that be the pensions house, whether it be the bank, whether it be the investment company, whomever, confidence that this third party coming in, A, is legitimate, B, is fit for purpose, and C, has been authorized by the customer, just becomes a much more complex process. Doesn't mean it can't be dealt with. We just need to recognize that and build the infrastructure to meet those requirements. If I can just sort of slip back a little bit, what went well, what hasn't gone well, to me, what hasn't gone well, we keep using this word, even in this panel, called open. Nothing's open, okay? Consumers run to the hills when they think their data is being used and given to people without them being able to understand. We should drop it. This is simply new channels for doing business. Yeah. Sam was right. It's all about the proposition at the end of the day. That's what draws customers into it. Yeah, they don't need to know it's open banking. They don't need to know it's a different set of rails out there. And you know, the UK has been really good, but where I feel we've lacked as an industry, and I take this as a UK based and also from a European perspective, it's lack of education. We've built it and we think people are going to come running to it, but they don't understand it. They actually turn and walk the other way. We've got to encourage them through education. And that's been a mantra I have been banging on about for years now. And we still seem to ignore it at every level within the industry.
I think that's a really good point, actually. I was having this exact conversation this morning with a partner of ours talking about how open finance may roll out in the Middle East, and quite rightly, for years now, we've as consumers, as citizens, we've been continually educated about the importance of privacy, the importance of security, and I think what we've actually implemented is, rather than something that undermines that, it's something that strengthens that. We've implemented now an infrastructure which has really strong security standards and is based around very explicit consent. So it's actually giving you the tools to control privacy and access rather than open. And I think, yeah, there is that question around education, and should that come from just delivering great use cases that people use, or should it come from a top-down educational initiative, or is it a bit of both? I mean,
Hugh, I think it's a bit of both. It's about delivering the proposition in the first instance that attracts people to want to use it. You know, whether that be because it's slickness of the payment mechanism, you know, friction, removal of friction, whatever.
Mortgage application example that Sam mentioned. That's a
exactly. You know, if I want to do a mortgage, why can't I just give them access to the account so they can see the data? Okay. Easier for me, but actually, do you know what? It's easier for the lender as well, because they're not having to scan in documents and then repair those documents where the scans haven't gone properly. And, you know, they can automate their process. So they get greater benefit out of it. But the education piece to me comes in that educating those consumers that by using that new channel, they still are afforded the same protections. Yeah. So they are confident that it doesn't matter whether I use this established channel that I've been used to, or I use this new channel that's now being presented to me. As a consumer, I have confidence that I have the same levels of protection in place for when something goes wrong. Because I don't mind when it goes really well, I'm very happy, but I do really care when it goes wrong.
Yeah, no, it's a good point. Helen, we're talking here around open finance, and you talked about payments as a key space, and variable recurring payments as an enabler. And I think that's very much an enabler for intelligent sort of open finance applications as well. I mean, you guys ran a discussion around variable recurring payments last night. I mean, what were some of the things that you were hearing from the community?
It was actually a lively and very provocative debate, and everybody is hugely excited. Okay, so that's been a reoccurring theme of this panel session. But what everybody was saying was a couple of things. First of all, contracts with customers are going to take a lot longer, and that was a key takeaway from Plaid. And I'm going to give her a bit of a shout out because I think this is a great line. So Kat from Plaid said, you know, what VRP did is it made the mundane magical. And I just think that's a lovely, you know, it makes the mundane magical. And that's really what I think open banking does, isn't it? Going back to Brendan's point about scanning in documents. So everybody was talking about the contracts and the length of time that would take. But also a key takeaway was consumer protection. Okay, so you know, everybody's expecting this huge growth trajectory. What could go, you know, if, and yes, there is already inherent protection in the process because they're regulated entities, and you know the way you go through the process. But there needs to be you know, liability frameworks put in place, and there needs to be like an open banking guarantee. So if you're looking at VRP is going to replace direct debits or or be an alternative to direct debits is probably a fairer way of saying it. With direct debits now, you have that power and protection of the direct debit guarantee. At this moment in time, there isn't any such thing with open banking. That's just a question of us evolving, and it will happen. It will happen, and we just need to start the debate to make it happen. But so going back to variable recurring payments and the part that plays in open finance and embedded finance, it really does play a part. You've got the banks, and the banks invariably will go for banking 2.0, which is moving away from just a place to hold your money. They will get into the embedded payments market, and you only need to talk to Simon Torreson, and I think he quotes a figure from the World Economic Forum that says that the embedded finance market is worth $7.2 trillion. That's an incomprehensible amount of money. And then if you have a look at the open finance market as well, and I actually think we're doing okay in the UK on that. You've got a regulator that has already done a call for input, and they've shared their outcomes. We are, let's give our regulator, a huge amount of kudos. We are very lucky in the UK to have an innovative regulator that has actually said, to Brendan's point, that we should go out to the market and we should educate the market. We should be listening to what the customers say, listening to what companies like Sam's have to say. So do more of that market engagement. So when you look at open finance, it's very easy to say, Australia might be leading the way with CDR, and Brazil, we've launched in Brazil. You were on our panel, Hugh. Brazil and Australia have both looked at the UK, looked at lessons learned, and be able to leapfrog and have a faster pace of adoption. And Brazil, some hugely exciting use cases will happen in open banking because of what they've learned from the UK. So really, in the UK, we do need to get a little bit of a shimmy on, otherwise we're going to lose our competitive edge. Because, when you look at the readiness of companies around the world, we're just doing a big index, which we'll be launching next year, with Oxford University and Accenture and the World Bank and so on. And when you look at around the world where the countries are ready, we still maintain our position, but you only need to have a look at what's happening in Brazil to be inspired, absolutely inspired, and absolutely, shout out to them for the pace at which they are moving. Yeah.
Yeah, I would agree with that.
Sorry, can I just jump in there, Helen? Can I just extend what you said there? Because I think there's an important point that hasn't actually come out with what you've just said. What we see in the UK as a starting point, then we've seen within Canada and now within Brazil, is much more scheme-based approaches to open. Yeah. It's not about writing only the API standards that go there. It's also about writing the rule books that everyone operates under within those ecosystems. So everyone's on a level playing field. And one of the things that I find highly frustrating, not from a UK perspective, but from a European perspective, where PSD2 has been laid down telling you what to do, but not how to do it, is the biggest feedback we're getting from our customers at the moment is all around when there are problems and disputes. Yeah. You've got third parties who don't have to contract with banks. I've got a problem. I phone up my bank. The bank now has to go find out who the third party is. It has to try and invoke a dispute with a third party. There's only a little bit of regulation in PSD2 about this, saying you've got to sort it out in 15 days. And if you can't sort it out in 15 days, you've got 35 days. But you've then got a consumer sitting at the end of the line who's very unhappy. And we're good as an industry in looking forward, but don't forget we're an operational industry. So we have to always look at the what if scenarios so we can deal with those in a timely and effective manner.
Brendan, I couldn't agree with you more. My background is cards. In cards, you have chargebacks, and normally anybody in the chargeback environment, you instantly put a damp cloth over your head, okay? But that is a framework for dispute management and resolution that is uniform, it's just universally accepted. And I think where we need to get to, and it's a sign, I see this as a really positive sign of maturity, is we need, to your point, we need a framework. and that would lend itself to a more scheme approach, and that would lend itself to interoperability and global standards. And so if you have those global standards, you've got interoperability, and then you've got that framework which we have in the card world of chargebacks, and everybody is working to the same rule book. And then what you are preventing is a PR disaster with, it's splashed over the front of the Daily Mail or something, where some customer has been let down. Because there was a bad apple in the barrel, if I can just use that metaphor, because, even in a regulated entity, the regulated entities need to have a framework and those trust and liability models alongside it to operate at scale. And we can all see the scale. So surely that's what we need to be talking about. And I think that's exciting, because you know what, we're actually planning for huge volumes. Yeah.
And I think, I'll take the moderator's opportunity here to jump in a little bit and try and wrap the conversation on this point, if I may. I think there's some really good points. I have to say, actually, personally, I don't necessarily agree with all of what has been said. I think most of it, because I think what we're doing with open banking is we're putting in place some infrastructure that supports a very broad range of different use cases, and some of them will absolutely benefit from what we've talked about there. Frameworks for the operationalization of disputes and things, and actually some of them it may be less necessary. It's a very simple example. In the card payment world, there's an equal approach to disputes for all types of spend. How often do you charge back buying a cup of coffee? Very different than the risk that sits with something like paying a holiday. And I think there's an opportunity to do things better. But those same considerations, I think, Brendan, you raise a really good point around making sure the industry continues to think about what happens when things go wrong. I'm going to make a slight shameless plug here, but one of the things we've been trying to do around variable recurring payments is just show the potential, because there's such a broad range of use cases. It's a technical standard that allows a long-lived payment consent. Now that can help me moving money from one of my accounts to another. It can help me paying you for, half of dinner last night or something like that. It can cover supplier bill payments, all sorts of things. So one of the things we're trying to do through a hackathon at the moment is to show that potential, and it'll help these discussions between the banks and the third parties. But I think as we, again, switch gear a little bit now to blueprint for the digital economy, if we think beyond open banking, beyond open finance, to a broader data sharing economy, we've covered a lot of ground here in terms of consumer understanding and confidence, how you establish trust in the ecosystem, what are some of the barriers. But are we ready for a data sharing economy? Sam,
we are. We're definitely ready, Hugh. I have to say, I'm delighted to say that actually, because of working with very large enterprises, they are used to working with a lot of data already. If you think about the world that we operate in order to do underwriting, all those things, they are actually used to working with data. What they're not used to working with is live data. So they're used to kind of massaging it, but they're very excited about the concept. And a couple of our clients can actually merge and have already started this, where you actually overlay health data with your wealth data, and then actually even things like, dare I mention, the temperature. And when you go and put those three together, you see things like, actually, on a rainy day, this happens. On a really sunny day, that happens. So actually you start to be able to even correlate things through to, you're going to be amazed to the fact that, we all actually end up in A&E, on sunny, when the temperature's above this and that, we actually don't end up in it. It's incredible. And then what we will do in terms of managing our money. So they are already layering that data and looking in. And so I find it incredibly exciting, because we talked about open banking to open finance for the consumer, but actually to take the propositions to another level of operation, to bring me products and services that are going to really delight me in this new world, that's what those companies have got to do.
And what about, so one of the conversations we often hear in this space, you have a lot of conversations around customer data right, which is entrenched in GDPR and the customer data, consumer data right in Australia. You also have conversations around this concept of reciprocity. If I have to expose a company, if I have to expose my data to you, I want you to expose your data to me. What's the right line here? Because I mean, ultimately, it's the customer's information, but also businesses are investing in holding it, enriching it, in maintaining it. What are your views, Sam and Brendan, on this question of reciprocity? How do you think this plays out?
Well, I really think I think the companies that are willing to buy into that completely will do better, because to be honest, it's not my individual data that is actually the real gold for the company trying to work out what products and services to give me. So to give you a good example, I mean, Waitrose, people talk about, value exchange. They don't realize that actually, if they didn't understand buying habits, they couldn't put ice cream and all the salads on the shelves in mass, panic mode with the British weather. So that when we all want to have barbecues and salads and ice cream, apparently down south, it's when it's above 22 degrees, up north above 19 degrees. And they know exactly when to shift those shelves and get the stuff in. And the thing is, we like it, right? I don't want to go to the shop when it's 25 degrees and, basically it's a load of risotto on the shelves because I don't feel like eating risotto. So we are delighted when companies respond to us, what we want and need. And that, to me, is what open banking, open finance, and actually layering the data. Oh my God, it's amazing. But they actually need their customers' data anonymized to work with. So to me, it shouldn't be about whether you want to share what I've got on you, because actually that's fine. I'm not sharing my whole anonymized data set that I'm working with the temperature and this and that. I'm just giving back what I know about you. I think that's okay.
Yeah, I agree with that. I mean, Brendan, what are your thoughts on this?
It's just really steering into areas I have little view on. I'm going to just completely agree with Sam on this one. I think at the end of the day, as long as it's let's be honest, consumers are worried when they think their data is being shared in a way that they've not consented for it to be so. And I'm sorry, it's just coming back to one piece again, isn't it? It's about education. It's education. So as Sam's putting it, if you're just sharing out those bits that are not sensitive, that can help them then layer the data to draw conclusions from, then people are going to be willing to do that. But unless they're educated as to what is being shared and why it's being shared, and by the way, that's anonymous data and you're one in a record of 1,000, so we can never actually get down to who you really are. If people don't understand, they're not going to agree and they're not going to be happy. So it's all about this old mantra of education, education, education. I think I'm going back to Tony Blair there, aren't I? So
it sounds like it, yeah. So listen, we're getting towards the end now. I think it's been a really, really interesting discussion. So perhaps one final question for each of you. Let's get the crystal ball out. But if we think sort of maybe 5 years isn't enough, but it's still a long time. Let's think 5 years out. Where do you think we'll be? What we're talking about a blueprint here. Is there a particular market that we think will be the blueprint, or in the most advanced market in this sort of data sharing economy space? What do we think that will look like? Helen, perhaps. Sorry, I'll put you on the spot.
No, it's okay. Market, I would like to see that the UK is holding its geographical market. But if you're talking about market sector, I actually think that if, going back to Sam's point, I think we're going to see a lot happening with retailers and banks. And if you look at the super app, if you look at what is happening over in China, at the moment with the super apps, and if you look at what's beginning to happen over here, the super apps, open finance, embedded finance. So I think there's going to be a lot happening with banks and retailers around that space, and a huge amount happening with those super apps, whether it be, PayPal, Netflix, Spotify, all getting together and sharing that data, and that's where our lives and our lifestyles will move from open finance to open data to open life. And in 10 years' time, Hugh, we will all look back and be amazingly proud of the journey that we've all taken, because right now this is a moment in time And that's what I think that we should all just remember. It's everybody that is listening. It's everybody in this panel, all of the teams behind us, all of our ecosystem now. We're all working to make something phenomenally exciting happen. It is a really exciting moment in time right now.
Fantastic. Brendan, build on that if you may, if you can.
Well, it's very hard to build on it because I fully concur with everything that Helen's just said there. But I do think we will end up in an open data economy. And I'm not talking about UK here, I'm talking more globally. I think the work that we're doing today will lay the trust foundations in place for other vertical industries who will come under those umbrellas for a greater opportunity to share data in the wider ecosystems and so on. And ultimately, everything we're trying to do today is to benefit society, either at an individual level or at a more of a sort of macro level, country level, whatever. And I think we are, we called ourselves pioneers at the beginning of this, pioneers of open banking. But open banking is just a very, very small step on a much longer journey.
Yeah, fantastic. I know, I could not agree more. And Sam, final word from you, just to close that one out, if I may.
Well, so this is a bit of a wish list. Top of my wish list is that will no longer be product and transactional as an industry orientated at all. Those days will be gone. Never will you visit a website again where it talks about ISAs, leases, this, that. That's done and dusted. And basically, it's all about me as a customer and how I get serviced and looked after as a customer. And I am a unique person. I'm not in some bucket. I'm not in the millennial bucket or this bucket. I'm just me, and they service me, which I think that's the big shift that's coming.
Yeah,
fantastic. Well, listen, I want to thank you all. This has been a really, really interesting and lively discussion. Fantastic panel. I'm really heartened that actually the discussion has started and ended with this all being about actually how does this help make the customer's life better. My takeaway, this can help make sure the right infrastructure is there so that people get ice cream when they need ice cream. And actually, we've seen it in action with Sam getting a cup of tea just at the exact moment she wanted it. I'd like to
that was an open banking, Hugh. That was just a request for a cup of tea.
I know. But listen, thank you. This has been a great discussion. And we will leave it there. So thank you very much.
Thanks, Hugh.
thank you.